Hey guys, Darren here. Thanks for joining the Stock Options Market Weekly Update for the week of October 30th, 2023. We're going to touch on what happened last week in the market with the different sectors and where we are today with interest rates and different economic data as well. We are going to talk about the trades that we have on the option trading platform and go through each of those trades and understand what we are looking for in the week ahead. I think it's super important that we understand the strategies and the tools that the rich are using to get richer. Then we can use those same strategies and tools and profit in any market as well. I promise we're going to dig into many detailed option trading tips and tricks. So please hit that like button so that we can get this video out to as many people as possible. And if you haven't subscribed already, please do that down below and you'll be informed of future videos as soon as they come out. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, we started the week in the S&P 500, SPX we're going to look uh, at 42.24 and ended up at 41.17 down here. So we were down 2.5% last week and 2.7% the week prior. So about 5% in just the last 2 weeks. We're still up around 7% year to date. If we look at the year to date, we are still up from where we started on January 1st, about 7%. We started the year at 38.24. And right now the PE ratios are at 17.1, so more fairly valued, just below the 17.5 10-year average. This week on the economic calendar, we've got Wednesday, the Fed Chairman Powell is coming out and announcing any interest rates changes. And we are still looking at, it's not until June of next year that there would be an expected interest rate cut. We'll see. We're still staying flat with the Fed watch tool in all the months prior at 5.25 to 5.5, where we are today. So in case if interest rates do get, or if inflation does not come down, then the Fed may be forced to do something going forward. Looking at what happened last week, you can see the stock market was down 10% below the July peak. Stocks stumbled, bringing it 10% below the peak. And again, Powell's talked about keeping rates higher for longer. And we've got tensions in the Middle East. Israel just is going in on Gaza and fighting Hamas, and we've still got the Ukraine war going on, so there is some tension there, and that can affect oil prices as well. We've got a couple trades on that we'll look at later. Amazon rose 6.8% following its earnings report last week, and then Alphabet, Meta, and Tesla actually fell last week. They had big expectations already built in because they were up so much over the year, so they did come down. And some of the oil stocks, Exxon and Chevron, both fell quite a bit after missing earnings profits. And a lot of that is affected by the war and the ability to export oil as well. And oil prices have dropped a little bit, and that affects their forward future profits. So I do expect oil to rise. We'll talk about that a little bit more. And I think Chevron and Exxon are excellent buys right now, and I'm long them. On a separate report, the consumers' expectations for inflation are rising from 4.2 to 3 from 3.2 last month. So that's not real good for the economy and the market. And let's move on to the FactSet earnings report. If we go to page 1, we can see that Q3 earnings growth rate is just 2.7% right here, earnings growth. And then if we move on to page 15 here, and let me increase that. We've got for Q4 projecting 5.3% earnings growth and 3.8% revenue growth. So it's dropped a little from the prior week, but still we've got growth in Q4. And then you can look at calendar year 2024, and they're projecting earnings growth of 11.9%, so almost 12%, and revenue growth of 5.5%. So for 2024, it is expected to be better going forward. And then if we move down, I like to look at later in this, the PEs for the different sectors. And if we go to page 33, you can see here that energy is down, it dropped. So I think energy is a buy. Here's the dark blue is the forward PE, which is 10.8, and the 10-year average is 15.6. So that tells you it's a buy right now. Real estate is down as well. I'd be careful about that with interest rates being higher for longer. And I think commercial is going to struggle. We'll see. Utilities are down. I think that they'll do well going forward, and consumer staples as well. So with that, let's move on to the sectors. And if we look at the different sectors, we've last week everything was down except utilities. Look at that. So that's why we were down as a whole. Year to date, communication services is still up, XLC, and this is those, high-tech, let's see, Meta, Alphabet, which is Google, Netflix, all these have done really well year to date. They're up 31%, and that's kind of carried the market, as well as consumer discretionary, and I've still got that short trade on for XLY. I think going forward, it's going to be tough for people to spend on discretionary items when we've got student loans coming due and credit card rates, interest rates being high. Technology is up year to date 29%. All the other sectors are down. So with that, let's go into the individual trades. The first trade that we have on is /6J, which is the Japanese yen futures. And we've only got 5 days left. We need to stay above the 0.0067 mark. We are up pretty big in that, but we're right at that mark. So it's going to come down to how it does this next week. You can see here is where we're at 0.00673. Can't believe the numbers are so small for the Japanese yen versus the dollar. And then we just need to stay above this 0.067, and then we keep all that premium. So I'll look to close that out early next week. Oil, it's moved down last week, down to 85 from 88 the prior week. So we need oil. I've got two long put credit spreads, and then one call debit spread. So that's a long position as well. IVR must have been low when I put that on. We need to be above about 87.75 to start being profitable. Above 88, we're really profitable, and it can move back up. It was just at 88, so it can move back up this week, no problem. And we've got a lot of reasons for it to do so. I'm looking for that to move up. We've got 17 days to expiration, so I'm not too worried about that. If for some reason it stays low, I'm long oil, until the next election and our policies change and we start pumping oil again independently and producing it and becoming energy independent. So I'll just roll that as we get closer to expiration. AAP is Advanced Auto Parts, and they've got good fundamentals. We've talked about them in the past. I needed above 55. The whole market dropped last week, so it's down to 49. I'll look to roll that sometime toward the end of next week, probably, if we don't get an uptick. But in order to be profitable, we just need to be above 53. It's a good long-term position, and it's at lows. Apple, I put on a put credit spread so long again, and we're down with the big drop. But if you look at the chart, actually we should look at the year to date. Or the 1 year. I like to look at the 1 year. Let's do that right here, and then the daily. And you can see the 200-day moving average is the red line, the 50-day is the yellow line. We're well below the 200 moving average at 168. So I think Apple, is a behemoth in solid stock going forward. So I want to stay long. I'll look to roll that uh, put credit spread going forward as we get closer to expiration. We're at 19 days now, so anywhere between 10 and 15 days, I'll probably look to roll it. AMD, um, AMD is down as well, just like everything right now, and 96 is where it's at. The prior week it was at 102, and we've got the 105, 100 put credit spread on 19 days. I'll look to roll that. And then the 95 call. So we're above that, but that's a 5-day. That expires next week, and I bought that. So I'm kind of experimenting with buying like a week out options and playing them, buying them, kind of watching the day, kind of day trading them, looking at the different trends. So I want to have 30 to 45 days for most of my trades, but for certain stocks that trade within a range, I'm looking to capitalize on buying calls or selling puts if they're extended in the range between the days. So we'll see how that goes, and I'll make a video on it. It's a lower profit, lower percentage of profit pop uh, challenge, but if you can do it and do it well, then it's like printing money. You should be able to do it every week. So that's what I'm trying to prove out, and I'll keep you apprised of my success. But you can see above 102, we needed to move up pretty quickly. So we'll look at that next week and see how it's doing. Amazon, it's down as well to 127. Oh, you know what? Going back to AMD, they do have earnings Tuesday after the bell. So that will definitely affect the price. If they come out and they're good, most of the time the stock will move up and then we'll be fine. Intel, another chip stock that is big in AI, just like AMD, had good earnings last week and they moved way up. So I'm expecting AMD to do the same. So I think it may work out. Amazon, still it's down, or actually it moved up last week to 127 from 125. So we actually we're losing money last week. We're profitable now. And if you look at the chart, we're below the 200-day. So I like to be long in that situation. And if you look at the curve mode, we just need to be above 132 or at 127, and we were up just 8 on Friday. So I expect it to continue to move up, and we've still got 19 days to expiration. And Amazon is a monster. I'll always roll that going forward at these ranges when it's below the 200-day moving average. Boeing, they're in commercial airliners, but they're also defense as well. And with the war going on, I think they're going to do well. I've got a put spread, and they're way below the 200-day moving average. So I wanted to get in when it was low and kind of ride them up. So that's what we're looking to do. And they stayed pretty steady at 179. They were at 180 last, the week prior. Bank of America, all these stocks, the bank stocks are struggling right now. I'm long leaps options. I bought long deep in the money calls. You can see over a year out. So that's just kind of a way of playing capitalizing on them. I'll sell calls against them as well on up days in order to have poor man's covered calls and put on and collect some premium as well. Cat, I've got I put this in as another trade, it looks like. Well, that's a reminder. I'll have to look at that. But if we look at what we've got on right now, we're between 240 and 280, and yeah, I was looking to close the call, the 280, and roll it down to the 245. And with Cat, let's see, do we have earnings coming out? I can go to my positions over here on the left on the watch tab, and we can alphabetize and then look at Cat, and we can move this over a little. Yeah, they've got earnings next week, 10:31 before the bell. So yeah, that's what I thought. And so we'll see how they do, but that can move quite a bit and come right back above our 240. Or it could go down as well. But we're so profitable on the call side right here. The 280, 290. You can see 96% right there, probability of profit. So we've collected all the premium. There's only $24 left. So I want to roll it down and collect, another $3 in premium. And what that will look like when we do that, it's going to bring it down. Actually, I'll show you. I'm going to cancel this. So we're going to roll it down to 245, 255. So if we do that, right click, roll strikes down, put on analysis, and then we can roll these down. So we'll roll them down here to the 255, 265, or we could even go 250, 260 and collect another $2 in premium. So I'll look at that and look to put that on Monday. Chewy, I'm long, 17.5 put spread. We're above that at 18. So we are profitable now, down to 16.5. And Chewy is a great stock at lows, and they're going to continue to do well. They deliver the pet supplies to your door, kind of an Amazon for pets. DraftKings, we've got two deep in the money calls, and DraftKings has done well. We're up. We've sold 230 calls against it. So this is a poor man's covered call on those leaps. And we collected, because the market was down, we collected on the call side last week. So, we're profitable above, 25.5 and, up to 30 where we've sold our calls. Then we cut our profits off. But we've done really well in DraftKings, I believe, over the last quite a bit of time, but just in the last 30 days, we've made $430 in DraftKings. And I like it long. The online gambling is getting legalized in more states. Golding, small gold stock. We never talk about that, but that's kind of it's a 80-cent stock. So I just got that in there as a long play. Google, I've got a stop loss. So this is another one like AMD where I've sold the 5-day, we've got 5 days to expiration, and I bought a call. So I'm hoping for Google to shoot up before the end of the week on Friday. And we've had 2 down weeks in a row. There's a good chance that might happen. And I will also put on 47 days out. I'm going to sell a put spread against it as well. So I kind of put this in. You see pending, that is, and I put it above the market at $1.90. The market right now is trading at $1.47. So I put that in already so that I'm reminded on Monday, tomorrow. I'm making this video today, Sunday, and then I'll adjust that and place the trade. Lennar, a home builder, we've done pretty well. It's trading at 103. We're in the middle of the range. We've been profitable. We're profitable in the green. Here's where it's trading. I'll look to close that out at some point. We've got 19 days to expiration. L3 surprisingly went down, with the wars going on, and I know L3 is doing pretty well. And they've got a lot of electronic warfare and great defense products that are going to do well going forward. So I just sold a put spread in there. I'll roll that out if it doesn't pop up, at maybe 10 to 15 days to expiration. But I don't expect it after this big drop to drop much more than it has already. And I like it going forward. Lockheed Martin, same defense stock, $10 wide. And it's trading at 443. Let's see. And IVR is 53. It's in the profit range, defense play. We broke that 200-day moving average. MPW, I've owned the shares of stock. It's got a big dividend. It should come back in time. Healthcare REIT, so I'm not too worried about it, but it's been down surprisingly when, some of the hospitals didn't pay their bills. So actually, the REIT, MPW, actually took ownership of some of that, and that should benefit them in the future. But that's just kind of a long play that I'm hanging on to and collecting the dividend. Palantir, deep in the money, leaps option and selling calls against it, and it's at $15, and it has traded in between the range, I believe, of, yeah, down here. Wow, this was way back in May though, but it's been pretty steady between 14 and up to 20, and it's at 15 now. So I am long Palantir with that play. And if we just look at, just in the last 180 days, we've made not much. We've all a little bit more, $83. But long-term, Palantir is going to be great. PR, I'm not going to talk too much about that. It's a small oil stock that I believe could get acquired, but good company. SoFi, we've talked about this one, a bank that is going to be a monster in the future, but it's been hit like all the other fintech companies, and it's down. I think it's a screaming buy right now, under $7. I think, it could be, 15 and up, within a year. So I'm not too worried about SoFi. I've got 300 shares and then 10 leaps options against it. SOXL, the semiconductor ETF, I've got a 18 strangle on. It actually moved down to 15, so I actually put on the call to collect another $200. And if you look at the profit range on that, now I'm profitable from 13 all the way up to almost 23, and we make a profit. So IVR is pretty high at 39, and that allows us to do that. But you can see there's still $1,400 or $400 left to collect in the next 47 days. So I like trading actually SOXL. And SPX, I'm actually going to do a video coming out this week. I do 0 DTE SPX options, and I've had good luck with them. I trade call spreads, and you can see over the last 180 days, I've made what, $2,800. Last 60 days, I think it was, 2505, and this is what I've got a video coming out exactly how I did this. And then just last Friday, I made 210 plus 85, 295 in one day on Friday, trading SPX options. So I'm going to show you exactly my strategy for doing that, trading SPX, and go through exactly how it was done. So keep an eye out for that video. SPY, I've got some iron condors on. We're in between. We're at 410. We're right at the short put in the 19-day, the November chain, and then then we're down at 390 in December. So if you look at, here's where it's trading today at 410. We're in the profit zone. So we've got a lot of room to move on the upside, not so much on the downside. If it were to fall down further, I would roll the call side down and collect more premium and move this green profit range to the left. So we just make adjustments as that goes. TDOC, Teledoc, good long-term stock. I've got leaps in Teledoc, and let's see what we've done in the last 30 days. We've made a couple $100 in Teledoc, and yeah. And you can see how we're profitable as the stock moves up. We need it to move up quite a bit, above 24.5. It's way down right now, but it's continuing to do well because we're selling calls against it. So the market moved down, and I had calls, so I bought those back, closed them out, and made a profit on the options there. Toll Brothers, another housing stock. It's at 68. It's in between the range. We've made money. I'll be looking to close that out sometime soon. There's not a lot left to make, but it's right in between that range. It's profitable. Now, Tesla is down. It dropped down to 207. So we've, it's generally been a good stock to trade for us, but if we look at the chart, it's way down below the 200-day moving average right here. It was trending up, and now it's trending. It moved and it switched back down. but we're still in the profit range. We're at 207, so we're profitable down here to actually to 207, so we're right there. I may look to roll these calls down, um, although yeah, we're still in November, um, so yeah, I may just roll those down next week. The other thing that you could do is close the whole trade out and move out to December and recenter. Visa is we've got a 225, 230 put vertical, and it's stayed about where it is, but they're a big behemoth going forward. Should do well in the interest rate market going forward with higher rates, and it's down at its 200-day moving average, so I expect it to do well going forward. Verizon owns some shares outright, 100 shares, and there's a big dividend. That's why I've owned the shares versus options. And I sold a call against them at 34 and a half. And you can see it did move down, and we've collected some money on Verizon as well. Let's see, don't have too many left. Wells Fargo, Bank, Leaps. I'm not going to talk about that too much. Calls against it. The calls have done well, so we'll wait for that to come back, but it's out over a year. XLY is the ETF for consumer discretionary, and it has done really well. Let's see, over the last 30 days, 45 bucks, 314 just over the last 2 months in XLY with the call credit spreads that I have sold against it. And you can see the stock is trading right here at 149, and our spreads are all up here. So as long as we stay below 160, we're going to be profitable. And I don't expect consumer discretionary spending ETF to jump up in the next couple of weeks. And yeah, this is only 19 days here, and then yeah, I did sell another one in December at 157 as well. So I like being short XLY. And then the last one, Exxon Mobil. We've got a December put spread, 110, 100. I'm not worried about it long term, but yeah, there was a big drop last week when earnings came out. So we've collected premium, so we're actually right at break even right now in XOM. And if we look at over the last year, I think we've done okay. 140, we haven't done as well as I thought, but we've made money. And we'll look to stay long XOM. And that is it for the trades. Next week, we've got lots of earnings coming out. So keep an eye out for those and the next video. All right. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Also, please hit like and subscribe. Let's get this video out to as many people as possible. Check out the links below. There's a coaching program, there's a training video, and there's a link to Tastytrade, the best option trading platform. Please leave a comment below. Let me know what you're trading, and I will see you in the next video. Have a great week.